Ladies and gentlemen, good day and welcome to the Concall Q3 FY 2021-22 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair. Thank you, and over to you, ma'am.
Yeah, thank you, Rutuja. Good morning, everyone, and welcome to the Q3 FY22 earnings call of Container Corporation of India. We have the management today being represented by Mr. V. Kalyanarama, Chairman and Managing Director, and his entire team. I'll now hand over the call to Mr. Rama for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Thank you. Good morning, all of you. So, I'm happy to share with you that we had another very good quarter in Q3. The overall top line is one of the best ever for Q3, only just little short of the Q4 last year, what we got the highest ever top line. So this quarter we ended with 19 crores, and there is good margins maintained. Even though there are issues about container availability and the import-export things, we could maintain the volumes in EXIM also, and there is a growth. Even though growth is not very high, just maintained around, I think, 4% growth we could get over the corresponding quarter of the last year. And the domestic, of course, there is good growth, and that is continuing. Domestic volumes, we expect that to continuously grow in the domestic sector. In fact, that's a very encouraging thing. As all of you know, the margins in domestic, we kept on building up margins over the last 3-4 years, and we are able to maintain that margins at that level. So with this, the EXIM domestic business, we definitely see overall we will be crossing 4 million TEUs business this year. I think we already crossed the handling figures of 3 million TEUs till now combinedly, and we are very sure that we'll be crossing 4 million first time in this year. And infrastructure, we are keeping in pace with the demand, and we added 16 rakes in this year till now. And these 16 rakes, let me share with all of you that there are high capacity rakes. They're called BLCS rakes, which can carry 80-ton payload. The rakes what we are using are other rakes are either 61 tons payload or 68 tons payload. In fact, we are converting all 61 tons into 68 tons, and by the end of next financial year, everything will be 68 tons payload. But these new rakes are 80 tons payload. The advantage of these new rakes is that we'll be able to increase our double stacking on the DFC. On DFC, these rakes are permitted to run with 80 tons payload. And the new thing which started in this quarter is that second hub started Swaroopganj, that is near Palanpur. So we are now doing double stack between Swaroopganj and Kathuwas also. This has been allowed by railways. The commercial notifications have come, giving the benefit of double hubbing as well by the railways. So the double stack possibilities have increased. If we see the double stacks in this particular quarter, they have gone to 1,000 trains. I think maybe this is the first time we did 1,000 plus double stack trains in a quarter. So the growth in the double stacking itself is over the last year is 30% in the quarter on quarter, and in the corresponding 9 months, if we see, it is almost 50%, 46% to be precise. So this is the growth potential which we were discussing and we were hoping that DFC will bring in. Now that is coming into reality. Dedicated freight corridor is giving two advantages. One is the time sensitivity, so there is a sort of transit assurance for the customers. And second, more opportunity is for double stacking, because higher payload running is now allowed, and your company is already acquiring these higher payload rigs only now, and we are the only one now operating these higher payload rigs as of now. 16 rigs with us. And in this year, I think we'll be trying to add at least another 20 rigs. So we are continuously monitoring the production processes at 3 locations where these wagons are getting manufactured. So we are hopeful that we will be able to add at least another 20 rigs. We are sincerely trying on that. So that increases your number of rigs of this company also. As on date, I'm speaking to you, we are having 362 rigs. We are trying to take them to 380 rigs. And with the demand increasing, as I said, infrastructure, we are trying to keep up with the demand. So we already released orders for the container manufacturing within India, domestic manufacturing for 6,000 containers to 4 new container manufacturers. And another 2,000 also we will be releasing into domestic manufacturing. And we are coming out with a tender for 10,000 containers. So company is having a plan to acquire around 18,000 containers in the maybe next 8 to 9 months. So next year again there will be additional rigs we will be adding definitely. So that we are keeping our infrastructure in line with the demand. As I mentioned, the guidance, we are expecting 15% increase in our volumes. We are, as of now, we are, I think, 17% up over the last year. And top line, we will be touching, I already given that guidance, 7,500 crores we will achieve this year. And PAT will be plus 1,000 crores at the end of this as of 9 months. You have seen that PAT is 805 crores. That as of 9 months. So we will be definitely crossing 1,000 crores back. So things are very good. They're happening. One new development which I will be sharing with you, that what we are talking of, movement of bulk commodities in bulk in containers. That we did a little bit of movement, about 4 lakh tons of food grains last year, but we were doing a lot of experiments with the movement of cement in bulk in containers. That we completed our trials. We are now going for commercial exploitation of this. We are expecting good market in this. Next year, this will be a reality of movement of cement in bulk in containers. The market available in the first year will be anywhere between 5 million to 10 million tons. So we are now readying ourselves with the containers and the rigs for that movement, so that when the demand comes, we would like to pick up the entire demand without losing market demand there. So to give you a flavor of what this will be like in domestic, today we are owning 37,000 containers and we will be doing maybe this year around 12 million tons. In the 9 months we did 9 million tons, how much we did? 8.45 million tons of domestic cargo in the 9 months. So we are expecting this year we may end up maybe around 12 million tons here and there. So yes, another 10 million tons if we are expecting, we will be requiring more number of containers. That is what your company is doing. We are continuously trying to build up the infrastructure. And on the terminals front, new terminals, yes, one at Paradeep and at Varnama and at Dahej, they are almost nearing completion and we will be anytime starting operations there. They are again going to be a good business potential terminals. And as of now, I think there is 9 terminals under development, and we are further exploring the possibilities of strategic locations where we have to build our business. So this is all about your company in a nutshell. Thank you. Yeah, please open up for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankita Shah from Elara Capital. Please go ahead.
Thank you. Sir, is there any update on the land lease policy to be approved by the ministry?
As of now, there is no update. Still, the work is in progress.
Okay. Any timeline?
Earlier, we have given our workings, and now it is with the ministry and the government. There are other ministries involved in this. So they are working on this.
Sorry. Okay. On the domestic business, there is definitely a strong growth in volumes led by the new initiatives that you've mentioned. What is the potential growth that we can expect going forward? Will it continue at this run rate, or can we expect better? And also, realization growth potential here.
Realizations will be at the same level. See, realizations, because we are competing here with the road sector, the realizations will continue, maybe continuing at this level. But as far as growth potential, with the new things, what I talked of, once we got the requisite container and rolling stock with us, so it will be more than what we are seeing now. The growth potential in the near future will be much higher compared to the present one, what we are achieving.
Okay. So current, if I look at first 9 months.
Yeah.
Hello, am I audible? Sorry. First 9 months, we've seen kind of 40% growth in the first 9 months. So, on a year-over-year basis, what kind of growth do you expect in domestic volume?
That guidance I'll give at the end of the year, but as I said, it will be definitely a strong growth. You can expect that once. See, here the issue is that we have to bring the infrastructure. So the infrastructure is, today we got some challenges on that, because procurement from China has got some issues. We are working on all of them. So once we put the infrastructure, the growth will be definitely better than this in the near future, in 1 or 2 years.
Okay.
As a percentage wise. Then the base will increase, the percentages automatically will, they get flattened.
Sure. And just lastly, you can help us with the originating volumes and the market share. Thank you.
That any other people will ask, we'll come out with that. You can note down that. So we can go to the next question.
Thank you. The next question is from the line of Inderjit Singh from HDFC. Please go ahead.
Yeah, hi. Thanks a lot for the opportunity. Just one question, extension of the previous one. With the more containerization of bulk commodities and volume increase, is there a scope for the segmental margins in domestic to increase from current 8 to 10% levels? And where do you think it can be in 3 years' time?
As I said, I think I already mentioned this. The margins, what we are operating 10-12% is the normal margin. 8 to 10% today we are coming out with on the domestic sector. This 10% margin is normally a good margin in any logistics business. Of course, we have good margins on the EXIM segments. But in domestic sector, there will be more volumes, more numbers we will see. Definitely the profit in absolute terms will increase. But as a margin thing, I don't see a big upside on that. We'll continue to have in the same level.
Got it. Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hello. Good morning, sir.
Morning.
Sir, in your initial remark, you said on the cement side, additional volume of around 5-10 million. I did not get it properly. So if you can explain, and which are the routes that we are envisaging that domestic business will grow?
This is from cement company to their consumption markets. It is all over India.
Okay, all over
If you
India.
see the cement hubs, we got 2 hubs in the south, one at Tadipatri and one in Malkhed, and one cement hub in Bilaspur. There is one cement hub in the Rajasthan. So from all the cement hubs, there will be demand for this movement. Because the cement is produced entirely in bulk.
Correct.
And consumption is 70% in bulk.
Correct.
Because there are no means to transport in bulk today, only 10% is transported in bulk and rest of the thing is bagged and debagged at the consumption end.
Correct.
So there is a natural demand for this. Only thing is we should be able to give them the logistics with ease. It should not be too much of cumbersome logistics. That is what we were working on, and we are now sure we come out with a solution. So we are expecting, when I said 5 to 10 million tons, the share of the market in the bulk cement, it is only around less than 5%. So 70% what I am talking is equivalent to something like 220, 230 million tons.
Okay.
So now you can understand even if we achieve 10%, it is less than 5% of the bulk cement potential.
Okay. And this will be largely utilizing this DFC route in first?
No, not DFC. There is nothing to do with the DFC. The cement hubs, as I said, are at different places. So their consumption markets will be around 500 to 600 kilometers.
Correct.
So we will be moving to the consumption markets from the cement manufacturing places.
Okay. And in this domestic market, we were working on 3PL, then going 4PL. And so what stage we are now in that business domestic? So if you can...
3PL is definitely on the cards, but the 3PL, we want to develop a triple B model. And there was a lot of interest. But because of COVID, things are actually taken a back seat. So still, the COVID, now third wave is going on. So once this thing settles down, definitely there is a big market in the 3PL, because 3PL logistics are not provided for the industrial goods anywhere.
Correct.
But to go in that direction, we already started doing business solutions within the company. Now, our idea is to develop only distribution logistic nodes. But as a beginning, we started providing business solution services. That is an extension of what we are doing. So it is an end-to-end solution to a customer, complete solution. We'll pick up the cargo from the doorstep, then deliver the cargo at the doorstep. If it is EXIM, then we will deliver it, the container in the port. All the things are taken care of, including clearances, forwarding, everything. We are now trying to do that with the stakeholders with us.
Okay. And so last question. Because of COVID, there was a substantial disruption in EXIM trade, unavailability of a container and container getting stuck. So what stage, what is now status and how do we see improvement in that will help us?
See, the improvement is now the availability of slots is good. Container availability improved. But the imports volumes have not gone up. Exports are doing well. So the pain point of the exporters not getting the containers and not getting the slots, that I think to to a large extent got eased out. So there is not much of pain for the exporters. The volumes-wise, unless the industry picks up in India, the import volumes won't pick up. Once that picks up, then there is a good growth potential in EXIM side. And that time, I think we are able to maintain. See.
And that will also bring down the empty running cost, correct?
Empty running cost, yes. Empty running cost, in fact, it has come down. If we look at the empty running cost in EXIM, there is a continuous improvement. In the Q3, we could bring it down to 22 crores this time. Okay. So in this year itself, it has come down from 26 crores to 23.5 to 22.4.
Okay. Thank you very much, sir.
There is definitely empty running improvement. That is coming because we are now added one more hub and we increased our double stack running. And more empty containers we are bringing in, so there is a balanced traffic. Even though there are no imports, we are moving a lot of empty containers from port into the hinterland.
Okay. Great, sir. And thank you and all the best, sir. If I have a question, I'll come back to you.
Thank you. The next question is from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, thanks a lot. Sir, again, the originating volumes, if you could share on the EXIM and domestic side.
Originating for EXIM for this quarter is 549,425 TEUs and domestic is 97097. Total 646,522.
646,522. Okay, sir. Thanks a lot. And sir, my second and last question is, if you could, very briefly repeat what you said about the bulk movement of commodities. My line had actually dropped. I could not hear you clearly. Has Railways allowed a number of commodities there, and how much volume can we do in terms of number of containers?
What I was telling about the bulk commodity, movement of commodity in bulk is that, commodities are to move in bulk, either we require special containers or a methodology to move them in the normal GP containers. So we developed a methodology to move them in normal containers. Instead of procuring any special type of containers, will always involve an empty running back to the loading points. Whereas we definitely put them into circuit wherever we can do that. So there is more flexibility. A railway are allowing the movement of cement in bulk in containers. They are already given the circulars. A commercial policy has come out. Food grain is allowed, and other commodities. There is good potential. We can move any commodity in bulk. The method what we develop using flexi bags. We can move not only cement, food grains. We can move industrial salts. We can move other raw materials, which are not allowed in containers. There are only very few commodities which are not allowed to be containerized by Indian Railway, that is minerals and ores. So that we are not aiming. They are not required to be put into containers. So all the products which require to be put into containers, even fertilizers, you see, they get bulk, they get back. But again, looking at the consumption pattern of fertilizer, there is quite a substantial percentage of fertilizer which doesn't require to be bagged, because there is a mixing of fertilizers, preparing compound fertilizers at the consumption end. So that market we are now working on. What are the numbers in that? So even that is a potential thing for this. So at this moment, we limited our commercial working to cement, bulk cement. And as I told Bharat about the numbers, there is a huge number, but what we are aiming at is around 10 million tons market. That's a good number for us, because our domestic business, as on date, is around 11 to 12 million tons. So if we can add 10 million tons to domestic business, it is like doubling our domestic business.
Okay, thanks. Very clear.
Thank you. The next question is from the line of Deepika Mundra from JP Morgan. Please go ahead.
Hi, sir. Thank you for the opportunity. So firstly, just one clarification. You mentioned the target of 4 million TEU. By when are you targeting that kind of volume?
We are targeting this in this financial year because already for the first 9 months we have crossed 3 million TEUs. So in the last quarter we expect to do more than 1 million. So it will be 4 million TEUs for the financial year.
Okay. And sir, any longer term targets on the volume growth?
No, that we will give you for next financial year. Once this year is completed, we will tell you what we are aiming at.
Okay. And sir, the new terminals being added, can you give some timelines for those? And also the land policy or the land procurement, how is it being done for the new terminals?
See, all the terminals beyond 2006. Now, for the last 15 years, the land is owned by Concall. So, any new terminals is coming up, it will be our own land. We purchase it, or else if we take some land from any government authority, it will be on the long lease, not on the LLF basis. It will be 30 years or 35 years lease, one-time payment. In the new terminals, we are working on 9 terminals at this moment. Out of that, 3 terminals we are commissioning this year. This financial year, that is before March 31st.
Understood, sir. Thank you so much. I'll get back in the queue.
Thank you. The next question is from the line of Nitin from Green Capital. Please go ahead.
Hi, good afternoon, sir. This is Nitin Shakti from the Green Capital Single Family Office. Sir, I just wanted to get a sense if you could help me with the specific market share at the different ports, 9-month ended share at JNPT, Mundra, Pipavav, etc.
Yeah. Sanjay?
Yes. JNPT, actually, we have a market share of around 61%. But if we take out the private share, which is for a very short distance, 100 kilometers, then our share becomes more than 76% as JNPT.
This is one important thing all of you understand, because that market segment we are not interested. It is a movement of 20, 30 kilometers where there are no margins. We are not interested to enter into that segment. So the figures which if you take that segment, then it is looking as the percentage is less, but we are not at all interested in that segment. We don't want to get into that segment. Without that segment, our margins, our share is 77%.
And Mundra it is 46%, Pipavav 52%.
Okay, and the rail share out of all this at JNPT and Mundra will be how much? And Pipavav, rail share?
Rail share is JNPT 19%, Mundra 27.5%, and Pipavav 70%.
Okay, so there is an increase in the market share over the subsequent quarters from what I can see on the figures, correct?
Yes, yes. There is increase in our market share.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. My first question is, with respect to the Swarupganj commissioning, if you could elaborate a bit in terms of, how does it work in terms of savings from a cost efficiency perspective or from volume growth perspective, how does this help? And number 2, with respect to the DFC, if you could help, given now we are operating on the DFC to a great extent, any color you can provide with respect to efficiency and margin improvement on account of that?
Swarupganj actually helps us in many ways. First is that, as the CMD sir has already pointed out, at present Nhava Sheva is not on DFC. So by bringing the imports from Nhava Sheva to Swarupganj, we are double stacking between Swarupganj and Kathuwas, for which we have got special permission for double up from railway. And secondly, for the Jodhpur ICD, we are able to do double stacking from Swarupganj up to Mundra and Swarupganj to Pipavav in import-export both. That we are extensively using, and that is also increasing our margins for Jodhpur ICD. and which is also beneficial for the company. And in Swarupganj, we have done 100 double stack rakes in this quarter, last quarter, and we commissioned only, I think, 1.5 months back. In that, we have done 100 double stack rakes already. So it's quite beneficial for the company.
So here, what I will add, what further to Sanjay said, as I mentioned in my introductory remarks, the new rakes which we got is a 80-ton payload rakes. So that gives us the opportunity to do double stack of even domestic loading between Swarupganj and Kathuwas. That is around 550 kilometers. That improves our throughput, our margins. So we got a lot of domestic loading from the Gujarat area, which we can move into Swarupganj and can make double stack and bring up to Kathuwas, and then further single stack it will move. So that 550 kilometers, there is an increase in our margins. So this is another opportunity which we are now working on, and it is new thing that bringing domestic containers into double stack.
Right. And on the question with respect to the benefit of the DFC for the...
Already I think I told this here. You are again repeating the same thing. There is a time sensitivity cargo which is coming onto the DFC because there is a transit assurance now available. And we don't work out numbers, so that don't ask me what will be the margin percentage increase. That is your job. You please do that.
Got it, sir. If you could help with the data points, sir, with respect to lead distance and the empties cost.
Which cost?
Empties, cost of empty running, sir.
Cost of empty running for the 9 months period is in ISO EXIM it is 72 crores. And for domestic, it is 147.6. So total is around 220 crores.
Right, and the lead distance?
Sorry?
Lead distance.
Lead distance, okay. Lead is for EXIM, it is 698 kilometers, and domestic, it is 1395 kilometers for 9 months.
Got it. Thank you so much, sir.
Thank you. The next question is from the line of Bhavin Gandhi from DSP Mutual Fund. Please go ahead.
Thank you for taking my question, sir. Just wanted a clarification. You mentioned about double stacking on domestic routes. So these are not mixed trains, right? These are just domestic trains running independently.
No, they are mixed trains. Domestic and EXIM mixed between Swarupganj and Kathuwas.
Okay, so railways have allowed the mixed trains also now. I thought it was not the case earlier.
Railway, there is no for railway it is a container. Railway, there is no thing like EXIM container and domestic container.
Got it. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Hello. Yeah, good afternoon, sir. First question is on capital expenditures. So, with these rakes and commissioning of terminals, as you suggested, are we looking to close at 500 crores for FY22 as suggested? Or it could
We already spent more than 500 crores by this quarter. Now the capex spending till the end of this quarter is 525 crores.
So what will be full year expectation now?
Full year expectation. Maybe we may touch around 700 crores.
Okay.
So we gave a forecast of 500, but we may touch 700 crores. Next year's pipeline already there.
And sir, what about how is the volume mix changed at ports for the quarter?
Volume mix? What do you mean by volume mix?
Like JNPT we do around 30%, Mundra we do around 40%. So how is the mix in current quarter?
I already told, JNPT, our market share on the rail movement is 77%. When we take out the segment where we are not at all interested, the movement from JNPT to 30-40 kilometers area. So we don't want to enter that business. There is no margins and the rates get wasted. Because in rail operation, let me tell all of you friends, the terminal detentions are a major thing in that. So the running and terminal detention If it is not in the ratio of 60 to 60, 2 to 1, then the rake realizations on the rake investment will be less. So we don't want to get into business where it is less than 2 to 1 retention. So 2 should be running time and 1 should be retention time. That is what we always aim at.
Okay, and just last question. While cement as a segment which you are targeting for future growth for domestic, what generally has been fueling growth in past 9 months in terms of domestic? I understand certain new initiatives, but any specific new commodity which we have added or some commodity which is growing very fast?
There are a lot of commodities. We added industrial salt, we added tiles, we added the new loading points, food grains. So there is it's a bouquet of commodities. When I talk of cement, because it is one single commodity where we are trying to get a major chunk of share of the domestic, comparatively, what we are doing now, almost 70-80% we are aiming at getting from one single commodity. We are doing cement now also, but that's very less.
Sure, sir. Thank you, and I'll get back to the queue.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yes, sir. So just wanted to check in terms of, if you look at Mundra rail share, you mentioned around 27-28%. Now with the DFC operational for that Gujarat port connectivity, how do we see the rail share improving? While obviously our market share is fairly healthy, but more from a, rail coefficient kind of increasing further.
Rail coefficient, you see, the imports are less as of now, and mostly it is empty containers. We moved a lot of empty containers because of the scheme what we have given. Now, this rail share, I can't give a guesswork to this, but definitely it will increase because the transit assurance is coming to the customers. So more and people will definitely prefer. But then there will be some sort of operational constraints still there on the railways because the network problems. Now DFC has added from Palanpur. Beyond Palanpur, there are some operational constraints. The work is going on in railways. So once that operational constraints go away, then we may see an increase of another 5-6% in the rail share at Mundra also.
So you mean the feeder route from Palanpur to Mundra port?
Yeah.
And when is that expected to be completed, sir?
No, there is no work on that. But there are certain pain points in that those roads. Now they are railways are working on them. They are giving inputs there. Once they are completed, then the market share at the Mundra port will increase.
Fair point. And sir, also the JNPT connectivity, by when is that expected to be completed?
I don't want to answer this. I think you get connected to DFCCL people and ask this question.
No, sir.
So my 22nd, I think June 22.
Got it. Sir, the other aspect is, we gave a good update on what is happening with Swaroopganj and Khatwas, etc. But there were several other MMLPs that we had put up, particularly in the eastern region, which is Chhattisgarh, Odisha, as also in terms of Uttarakhand. So can you give, kind of what are all these MMLPs broadly kind of revenue generation, or what is the likely revenue generation that we're seeing from these MMLPs?
I told Bhumika that 3 MMLPs will commission this financial year. There are Paradip, Dahej, and Varnama. Varnama is Baroda, basically. It's Baroda. So these 3 are good business potential MMLPs. So and 6 more are now under construction. So there they will come up. Like Balli, we are already working. Balli, we are expecting the customs working to start in this financial year. that will also add volumes there because as of now, Balli is Goa. We are doing only DPE. So, you see, your company continuously keeps on working these things. New MMLPs, the 3 new MMLPs will get added. Now, as far as the growth potential, numbers, we don't give specific numbers for these things. But they are good business potential MMLPs, which will definitely adding numbers to these overall volumes.
Sure, sir. Thank you.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. So first is on the EXIM side. I think last time around you had mentioned that we've taken a 1,000 rupee price hike starting October. Just wanted to check, has it come into effect? Because when you look at the average realization per container, it is largely similar sequentially, 2Q and 3Q. Will it take some time for it to come into effect with all customers?
No, it is already in effect. Friend, understand, we moved a lot of empty containers at discount.
Right.
Yeah.
If you look at our chart of earning and expenses, there is
right.
Last in the row, that is other operating income. So if you have seen my results, you just compare December 20 to December 21. December 20 we earned 38 crores of other operating income, and December 21 we have earned 125 crores.
Okay.
Now, to the numbers, these are nearly 70 crores we have earned on these 2 charges that we started, right? And there is one more charge that we are adding, and we are putting in this TKD. They are also an incremental charge. It's an old charge, but this quarter we have earned incremental in 12 crores. So nearly 83 crores we have earned, which we have accounted for in other operating income. And as CMD have mentioned that there is some hit we are taking in empty running that after we are giving to the shipping liners. But in return, we are getting good margins here as well as assured loading on the output direction to the port. I hope I have clarified.
Yes, sir. Understood. So that the price hikes have already come into effect. There's no more effect of that we'll see from here on.
That's not a price hike. That is only in the bouquet of my pricing. We keep on changing something here and there.
Right. Understood.
Yes, it has given me more margin.
There will be effect of that in the next quarter also, because last financial year Q4, this price increase was not there.
Right, sir. So I was looking at it sequentially, sir. I understand on the YOY basis. Absolutely.
Okay.
My second question is, so you mentioned DFC will benefit, obviously, higher payload on double stacking, but also the transit assurance. Can we look at it, what percentage of our rakes we are right now running, or we are providing this transit assurance already? And, how much will this go up to when, the full Mundra connectivity happens on DFC?
The transit assurance now, we are now trying to provide on all the rakes, but actually it is not happening for all the rakes. So as of now, if you ask me, it is happening around 30-40% transit assurance. So there's the operations, because recently started around 3 months back. It's still to be smoothened out at the junction points of the Indian Railways and DFC. So once they get smoothened out, the transit assurance will be almost to around 80-90%. That will be a big influx point for getting more containers onto rail.
Right. So that will drive the shift from road to rail, basically, to an extent.
Yes.
Okay. And so how long will this take? So just a broad timeline on, getting to the 80-90% transit assurance?
Maybe another 3-4 months or 6 months, because what we are now trying to induct our own shunting locos at this point to ease the operations. So we are in the process. That may take around maybe 4 to 6 months.
Right. So thank you so much for this. I'll get back in with you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, hi. Good afternoon, sir. Just one question on the domestic segment. You've seen the EBIT per TU decline a little bit from the second quarter to the third quarter level.
while the volumes have actually expanded. So any color if you can provide on that, sir. Thank you.
For EBITDA margin, it has come to 4,980.
MT earning issue has gone up by 10 crore.
नहीं इसमें दो चीज जो है इसमें accounting का issue है these margins are at that level but one is the depreciation for new rakes and empty running costs so proportionate allotments we do among different segments so it's more of an accounting thing that there is a dip in the margin in the domestic.
Sure. And indicatively, sir, would the margins on the domestic side remain at where we are seeing at the Q3 levels, or these could improve as we go ahead?
You can see at Q1, Q2, Q3, these levels if you add on, and in the 9 months you can see that around 5,200 odd is the margin. So you can expect the margins to remain the same level, 5,200, 5,500. This is more of an accounting, my dear friend. So we will keep accounting for depreciations, we will keep accounting for new terminals, capitalizations, amortizations. So that how proportionately we are going to distribute to domestic, that affects the numbers. Otherwise, absolute margins wise, yes, it is around 5,000 plus per container. This,
got it, sir.
What you have to do is, when you look back in 2016, we were having only around 850 rupees per container as domestic margin. So that is what we built up in the over the last 5 years to bring the margins per container from 850 to 5,000 plus, while picking up the business as well.
Got it, sir. Thank you for your response.
Thank you. The next question is from the line of Jayesh Shah from OHM Portfolio. Please go ahead.
Hello, sir. Thanks for the opportunity. Sir, this land license fees, I just missed out, some problem at my end. I thought this issue was settled at 6% and now it is being revised to 7%. Is this linked to interest rates? How often can railways keep raising it? Because we thought 6% land license fees were for, they're all settled.
DFO, so let us understand the rules very clearly. 7% escalation is on the base price of the total land value. Okay?
Okay.
So the dynamic thing is 7% enhancement in the base value of the land. And 6% remains fixed. So today if the value of the land is 100 rupee, this year I'll pay 6 rupee on that, 6%. Next year that 100 rupee will become 107 rupee.
Okay, so this is a yearly escalation based on whatever the land revenue.
Dynamic portion is 7% enhancement in the value of the land.
Okay, so that is as per the rateable value calculation, is it?
Absolutely, and 6% remains the fixed over the updated value of the land. I think I have made it clear to you.
Okay. And secondly, when you're talking about setting up these new terminals, broadly, by what extent will our capacity go up? We're just trying to get that sense. I'm not talking of guidance for next year, but does it really, are we right in terms of thinking that your capacity would go up by whatever, 20, 30, 40%, or it would actually result in margin increase you were explaining?
Capacity expansions are, we can do capacity expansion even with existing terminals. We do a lot of innovations in that. We can go vertical space utilization. So, to put it very simple, these 3 new terminals, what I am talking of, will add a capacity of, let's say, another 2 lakh TEUs annually.
Okay. And have you finalized the expansion for next year, or this will be done later?
That let us discuss once this financial year is completed.
Okay. Thank you very much.
Thank you. The next question is from the line of Kaudanya N from JP Morgan. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, just a couple of questions. Firstly, on the haulage charge discount, I understand that it's set to expire in April 2022, and then we also have provided certain discounts to our customers. Also, just trying to understand the overall policy thing, if there is any representation by the industry to extend the discount, the timelines, And if not, what can be the potential impact or margin level for us?
See, if you look at margins, there is no impact. I think DF will explain you that. Maybe Manoj, you explain that first, then we'll answer.
So, you understand this. Whatever we have been giving in discount to this empty running in hinterland direction.
Mr. Manoj, can you hear me? I'm sorry to interrupt you. This
Yeah.
Sir, we are unable to hear you. You're sounding from a distance.
Okay, now I'm better?
Yes, please go ahead.
So the scheme that envisages is that we are giving the discount in hinterland direction from the port. But at the same time, the benefit that we are getting financially is we have given a condition that whatever empty we are bringing to our depot, it has to be loaded back from my depot only. So that is giving me 100% assurance in the outward direction to the port. So that has given me a lot of more business than what we used to get last FY when this option was there for them to go out to other depots or road mode also. This is number one. Number two, as you mentioned, or somebody mentioned that we have already got for two 1,000 rupee each bouquet in our total charges, which is applied on these empty containers also once they are loaded from here. So in the financial calculations, I am positive in my margins despite having this scheme. But let us understand that we have given a condition that whatever comes to my depot in empty running direction free of cost, it has to be loaded from my depot only. And that financials are giving me good benefit than what I was getting in the other regime. We will take a call end of the year. CMD will talk about it and we'll make our strategy afresh. After the end of this financial year, we have announced already that for this financial year, in fact, we liberalized it and made a scheme last quarter that more than 75%, if you do 10,000 plus, each shipping lines will be giving you 75% discount, and then we have 100% discount scheme also based on the volume. And we will take a look by the end of this FY.
I get. So essentially, if my understanding is correct, you will take a relook at the numbers post April 22, whether to extend it or not to extend it. Is that understanding right, sir?
No, it's like this. See, if you are asking whether the industry and the customers, are they asking for the extension of this? There always a demand to extend this scheme without any doubt. So there is a demand for extension. Now we are working out as explained by DF. So this is a very positive thing. And we got positive response, we got good business, our margins increased, our absolute profits increased because of these schemes. So taking all these things, before the end of the financial year, we will definitely announce the scheme for the next financial year. So that there is a continuity for the customers. So when he mentioned that at the end of the financial year, that means what is effective for the next financial year, we will be very clear with the customers and there will not be any doubt in their minds, so that those customers who come to us will be with us.
Okay, understood, sir. And sir, my second question is on the rake procurement side. I mean, I understand that we are going for higher capacity rakes and all with the BLCS and BLCM. So just trying to understand, with respect to the speed limits on DFC and also on non-DFC of railways, is there any
Don't ask too much of technical thing here. It is railway is too technical. So let's understand in basics. We are procuring only BLCS, no BLCM. All new procurement is BLCS, which can carry 80 tons payload. BLCM carries 68 tons payload. When I say payload, that is the weight we can put on the wagon. Okay, so 12 tons extra we can carry. That gives a lot of opportunities for us. Number one. Number two, BLCS on DFC, it can carry that 80 tons payload with 100 kilometers speed. And this, all BLCS wagons are 100 kilometer speed, and on Indian Railways, they are running now at 65. That is absolutely not a problem because average goods train speed on Indian Railways is less than 30 kilometers. So that is not at all an impediment. BLCM, what I talked is, we got a stock called BLC, which is 61 tons payload, which was inducted long back, maybe 20 years back, continuously we were inducting. We are upgrading them all into BLCM. Already we upgraded almost 140 rigs. Some rigs left out. They will be upgraded by the end of the next financial year. So we will have only BLCM and BLCS in our stock. Okay?
Understood, sir. And I was asking about the speed limits if Railways has approved it, the higher speed limits on DFC.
No problem. Like I already told you, speed limits are 100 kilometers. But the trains run at 30 kilometers average speed. So that is not at all an impediment, and that is not a point of concern for anyone.
Understood, sir. Got it. Thank you very much.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, I have a question on dwell time. I just wanted to know what are typical dwell time at Concall's terminal in EXIM business? And sir, how are they different in export and import leg?
Yeah, I think you are not following up Concall. We announced a scheme almost 2 years back that we give free time of 45 days to the loaded containers and 90 days for empty containers. And we are continuing.
No, sir. I'm aware. I just want to know, when an exporter tries to send a container to a port, by the time it enters Concall's terminal and by the time it leaves Concall terminal, what are typical time? This is more from a time study, not the warehousing. I am aware of that 45 days. The benefit that you are giving.
In our terminals, we clear immediately. That is why customers come to us. Our clearance of port is mostly within, I can say, 2 days from the time the containers are.
Yeah, so the 2 days, I just want to know 2 days. Is that 2 days, is it?
Listen to me, first of all, why you come to conclusion?
Sure.
On the import side from port, it is around 2 days. On export side, we clear within a day, 24 hours.
Okay, fair enough, sir. And sir, just want to know, is it a function of volume? I suppose it's a function of volume and how frequently you run trains between terminal and port, right? So does DFC change these numbers?
You are not able to frame your question. I will explain. See, DFC gives the time sensitivity to the cargo. So there is a transit assurance. So more and more numbers will get booked with us. But anybody running on Indian Railways, they have to run with numbers because a train not less than 80 TEUs have to be run. If it is less than 80 TEUs, we have to pay idle freight to railways. That is the rule, commercial rule. So we always either 80 TEUs plus. So we run 90 TEU trains. We get those numbers. That is how this company is going. Okay?
Fair enough.
Thank you. I think, moderator, please, the last 1 or 2 questions we will take now. It is 1 hour.
Sure, sir. Thank you. The next question is from the line of Aditya Makaria from HDFC. Please go ahead.
Yes, this is Aditya from HDFC Securities. So just one question. You mentioned that you're focusing more on domestic, and currently most of our cargo comes from the western side of India. So is it fair to say that now your mix will become more on the eastern side, because a lot of the domestic cargo actually happens, a lot of the domestic movement happens on the eastern side?
No, it is not so. I don't know. Domestic movement happens all over India. See, when I said we will be working on cement, cement is in clusters. Cement clusters there are 4 or 5 clusters in India, 1 in western India, 2 in South India, 1 in Chhattisgarh. So these cement clusters we will be concentrating. There is one small cluster in eastern India also. So the domestic cargo, now this cement business will be all over India, because cement consumption is all over India. And also please don't misunderstand when we say we are emphasis on domestic. It is not that EXIM there is no emphasis. EXIM there will be always emphasis. Whenever the EXIM growth is there, we will be picking up the demand. In domestic, we are working on that particular segment which is going to give us good volumes. Okay?
Okay. And second thing, sir, if I look at a 3 to 5 year view, as the mix of domestic goes up, the margins today are very healthy at 24-25%. And in general, the margins in domestic have been lower because you compete with road. So to that extent, will structurally margins come down?
See, as an analyst, what you look at? You look at return on capital, isn't it?
Yes.
And the absolute numbers, what PAT we are going to give. Now, percentage is one statistics which, speaks of, as a top line, what is my margin. So, my absolute numbers will go up.
Mm-hmm.
My ROC will go up. Whereas, my margin percentage as the top line will definitely come down because domestic as it increases, the margin percentage-wise will be less. But my absolute number will go up.
Got you, sir. Got you. Very clear. Thank you. Thank you so much, sir.
The last question, moderator, please.
Thank you. Ladies and gentlemen, this will be the last question for today, which is from the line of Vikram from Phillip Capital. Please go ahead.
Yeah. Good afternoon, sir. What was the rail freight margin for this quarter and 9 months?
See, the rail freight margin for this 9 months is around 32%. See, as just Manoj explained to you, there are some charges we are collecting as other operating income. Basically, they are freight based only. But we put the bouquet of charges in different ways so that there will not be too much of emphasis on one thing. So if I take those 1,000 increases, which I have not done in freight, but I have done as other operating income, our rail freight margin is coming to around 32% for the 9 months. For the quarter also, it will be something like around 32-33%.
Got it. Thank you very much, sir.
Thank you.
Ladies and gentlemen, as this was the last question for today, I would now like to hand the conference over to Ms. Bhumika Nair for closing comments.
Yes, sir. Thank you so much for the entire team and giving us an opportunity to host the call, as also all the participants. Thank you very much and wish you all the very best.
Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.